Anand Agarwal, CFO at V-Mart, is now with us. So, you've undertaken a price hike of about 8 to 10% across various categories. This is to pass on the price increase that you've seen in yarn. With inflationary pressure still persisting, how many more hikes will be needed so that you can compensate for this increase in overall input cost?
Yes, you are absolutely right. The inflationary pressures are very, very challenging. And in the last 15 years, this is the first price hike that we have ever had to take. So we're not, particularly very happy about taking a price hike because we being a value apparel fashion retailer, we've always sort of absorbed the inflationary pressure so far. But this year, the rise in the cotton yarn prices have been upwards of 50%, and we were left with absolutely no option but to take the price hikes. As of now, I think with the series of 2 price hikes that we've already taken, I do not think that we should look for something more. But it is not ruled out. Also, given the fact that given the warlike situation, the markets are definitely going to be in a bit of tizzy. And further situation, how it develops, it will depend on how the raw material pricing remains going forward. But as of now, we have not taken a decision on any further price hike. The only caveat remaining is the GST increase, which was postponed by the government in the end of December, which was supposed to increase from 5% to 12% on apparel. If that also happens, I think that would also lead to a further increase by at least 7% in the maximum retail price for the end consumer.
Sure, and then that point is taken, and none of the managements like taking price hikes. But in that case, if you don't go for that and the raw material prices keep on increasing, will you be able to absorb these price pressures, and will that impact your margins in that case?
We've always remained a very honest price player, and we have passed on the full impact of the price rise to the end customer. Good or bad, I think the situation is true for all retailers and all participants in the ecosystem. So the consumers really do not have a choice. Now, so far, we have not seen any major impact in the volume drops due to the price hikes. But going forward, if we are forced to take more price hikes, a negative impact on the volumes is not ruled out. Now, having said that, I think on the margins, so far we have been able to maintain the margins because we've been able to pass on the full impact of the price rise on the the retail pricing. And going forward, also, I am not anticipating a very big impact, but you never know. As of now, we are not seeing any impact on the margins going forward.
Okay, so that's good to hear, not seeing a negative impact on the margins, and volume impact is something that is not what you're envisaging as well. But what trend we have seen in the quarter gone by is that while the recovery is quite strong in bigger cities, there is some sluggishness in the rural economy. And that's the word coming in from most of the industry players. What is your sense as far as this quarter is concerned with the impact of COVID waning away? Is rural demand bouncing back?
So that's a very difficult question to answer, to comment on the timing, but definitely we are seeing some impact on the rural parts because we operate in tier 1 towns as well as tier 2 and tier 3 towns. Definitely, while the COVID and post-COVID recovery has been strong in all markets, but definitely what we are seeing is in tier 2, tier 3 towns, the recovery is slightly slower. A large part of that might be because of the high inflation, low wage growth, low Manrega, and lack of infra spend in the rural sector by the government. But with a good harvest season and normalization of the situation post-COVID, we are hopeful that in the next 3 to 6 months we should start seeing things come back to normal.
Have you already started enjoying synergies from Unlimited acquisition? What is the additional revenue expected from this?
Yeah, absolutely. I think we are very gung-ho on the acquisition. We started that operations right on day one with full technology integration and people integration right from 1st of September. And so far, I think in the last 4 months, we're very happy to report that the progress has been very satisfactory. There have been no surprises, and in fact, the operations for the last 4 months also have been profitable, which gives us a lot of hope of improving the situation even going forward. On the synergies side, I think we've inherited a very strong team with a very in-depth knowledge of the Southern India market, which we are fully trying to leverage and increase our presence in South India through more new store openings and also understanding of the consumer and the fashion sense of that different market which we had not been earlier before. The other part also is that there is a lot of value add that we have got in terms of the product knowledge and especially around women apparel, which was not a very core and a strong area for V-Mart in the past, and that is something that we've been trying to imbibe in our core markets of North India also with a great success. I think the litmus test is going to be how soon can we bring the full year operations to normalcy in South India and improve the performance by 20 to 25% in terms of sales throughput, which should bring the overall EBITDA for the South India market to roughly around 5% or so pre-Ind AS, which will still be a little lower than the national average of V-Mart, but that will definitely be a far better number to report for, considering the past track record of that particular chain.
Right, sir. Thank you so much, sir, for taking out time for us. Always good to get perspective from you.